Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Thursday, April 14th, 2022. Tomorrow is Good Friday, so the stock market is closed, so I am recording this video on Thursday. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. Stocks were under pressure most of the week, and S&P lost 2%. NASDAQ and small caps actually are approaching new lows, so we will look at that. High yield bonds did hit a new low, and because of the correlation between high yield bonds and stocks, this worries me immensely. The fear is clearly palpable, and we'll look at the consumer staples versus technology sectors and how are they behaving. Treasury bonds collapsed to new lows, and mortgage rates actually went to 12-year high. So that's quite significant if you're trying to buy a house. We'll look at gold and gold miners, and despite strong dollar, gold and gold miners are moving higher. And just a really blockbuster trade, natural gas breakout. Congratulations if you're a subscriber. We'll look at that. And Bitcoin is moving steadily towards new low, and it could collapse through this important support level, which I will show. If you're a subscriber, then stay tuned. We will cover all of these stocks. Notice there's quite a bit of gold-related stocks, and some of the bigger names are under pressure, so stay tuned if you're a subscriber. Okay, so let's quickly look at generally what I do. So on this chart you can see the green, blue, red, and yellow horizontal lines. So these are support resistance lines. You can find out more about them by going to the description of the video. And this is how I trade basically. So when the stock closes above the blue line, so for example you can see this was an alert right there on 18th of March, and it needs to move, a little bit higher, then we can move our stop to entry. This actually did not happen, and the stock continued lower, and now it's continuing lower. And last week I showed the support resistance level right there at 4516. So you can see right there on 6th of April there was a breakdown below the support resistance level, and 2 days in a row we retested this level on the upside, but it failed, and then we moved lower. Today's action was actually quite bad as well, and I just wanted to show this quickly on 5-minute chart. So if you have my indicators, then you can trade continuous securities, and for futures, for example, as a continuous security, you can trade it on, pretty much any chart. And so notice what's happening here. There was an initial breakdown right there in the morning, and then on bounces you can short. See, so this is how I would trade it. Okay, so this is how I would, trade it intraday throughout the day, day trade, whatever you want to call it. Now, if I was to look at the same chart of S&P 500 ETF SPY, so I'm going to look at SPY, it looks different. And this is the reason why you do not want to day trade stocks using my indicators. It's because this will get, it's completely get thrown off. So if you want to trade intraday, use the continuous futures. You can also use the contract for difference. So XPX 500 USD is the contract for difference, and you can use it as well. See, it follows the S&P 500 futures, so you can do the same thing. For example, in this case, sell it short on bounce towards the red support resistance line, and you would have been just great trades. I mean, if you're doing, for example, puts, if you buy puts right there, you can, that's huge gains. This is easily 100% gain if you're trading short-term options. But let's get back to the daily charts where humans mostly operate. And here we're seeing that we're approaching this red line, which is, basically caution at this point. The problem comes up when you look at other major indexes. So let's look at, let's look at NASDAQ. Here's NASDAQ. So the way I trade stocks on daily charts, okay, so this is important. Stocks on daily charts. This is daily charts. Here where I'm hovering, it says D for daily. That means each candlestick is 1 day's worth of activity. So NASDAQ is a stock index, and I give benefit of a doubt of stocks to the bulls, to the upside for the stock indexes. So I use the yellow line on daily chart, but if you're trading at intraday, you can use the red and the blue line. Right? If you have any questions, just ask me a question. And you can also chat with me here on TradingView. But here on daily chart, the NASDAQ broke down into the bear market right there on March 8th. Okay, and at this point I said, okay, this is now a bearish security. So where do we sell it short? We sell it short once it bounces and then closes back below the red line. So this actually did occur in 8th of April right there. Theoretically, you could have already made decent money here and moved your stop to entry. So the way this looks, it doesn't look good at all. It looks like we might retest this lows from the March, and if we don't hold there, we could see just a collapse, because most people, where would they put the stop? They would put the stop below the recent lows, and these are the recent lows. So once the stop is hit, they just, okay, that's it, I'm gonna sell, and then boom, we can just collapse through that level. So let's be on the lookout for significantly more downside if we hit, especially this 15 March lows, if we get below it. So let's be on the lookout for that. If we look at Russell 2000, so Russell 2000 has been under severe pressure for a longer time. You can see that the entry into a bear market by my system actually occurred here on January 18th, and we had several opportunities to sell it short. So the latest one actually was also successful, and what worries me again is that we're extremely close to the lows. In this case, it was a February low, but if we break below this low again, I think we can see a collapse of the Russell 2000. So this again doesn't look good to me, and the only thing that is still kind of gives me hope is that the S&P 500 technically has closed above the bullish levels, the blue support resistance line, and technically has not yet closed below the yellow line. Yellow line is currently at 4159. That would be a bear market for S&P 500. In my book, unequivocal bear market for the entire stock market. It yet has not happened, so we will need to look out for that. But two of the other major indexes, the NASDAQ and the Russell, actually did do that already. So this is big red flags. Additional huge red flag is this junk debt behavior. So JNK. There's the entry into a bear market, the latest signal 18th of January, and then it just kept sliding. And 11th of April, this Monday, we hit a new low. This is really bad. Why do I worry about junk debt? So let's look at the monthly chart, or rather weekly chart. So this is weekly chart, meaning that each candlestick, says W, each candlestick is 1 week's worth of activity. But the important thing here is this bottom part. So this is correlation to the S&P 500. Generally speaking, once again, correlation of junk debt to S&P 500 is very high. So going back, generally speaking, the correlation spends most of its time in positive territory. In other words, if S&P 500 goes down, junk debt goes down as well. And if junk debt goes down, then S&P 500 also goes down. So we're looking at junk debt potentially leading the stock market lower. So this is what I am trying to hammer into this with this chart, is that maybe what we're seeing is just a beginning. Yes, we came a huge way. We came from 107 to 99. It's a significant drop already. Maybe we'll get a bounce, but maybe we'll just continue lower, you see. So this is another very big red flag for me with relationship to stocks right now. Another big red flag is the behavior of consumer staples, XLP, versus consumer communication services, which is basically technology firms. So let me just compare the two charts. So XLP, consumer staples, what's in it? Things like people buy this stuff. Doesn't matter, if there is recession, if there is no recession, if there is war, there is no war, we're still gonna buy this Procter and Gamble stuff. We're still gonna go to Costco. We're still gonna drink Pepsi, and we're definitely gonna go to Walmart. Some people like to smoke, so they're gonna buy Philip Morris products. They're at new highs, you see. So the behavior of XLP is bullish. They're going up. Compare this to communication services, a relatively recent sector. It used to be part of the XLK technology, but in this sector we have Google 21%, Facebook Meta platform, and a whole bunch of other, like Netflix and Verizon, for example, T-Mobile, Comcast. And you can see they're near lows. You see, so the behavior is telling. When consumer staples are increasing in price, consumer staples are going up. Technology firms, or not consumer staples, things that people can go without, they're going down. This is showing fear. The people are kind of not sure about the future. People are not sure where the money is going to come from, so they're saving money by not buying things that these companies sell. They're stocking up on staples. So this is clearly showing fear in the markets. Eventually, during the bear markets, during true bear markets, everything goes down. So even consumer staples will eventually turn around and continue lower. But I think this is the reason why S&P 500 has not yet collapsed, is that because we have several sectors, like consumer staples, like utilities, and energy sector, that are still going higher, while many sectors like technology are actually going lower. So we need to eventually see which one of this two forces will win, the fear or the greed. So right now we're kind of in between. We'll see which way we'll go in the next few weeks. At the same time, we got Treasuries completely selling collapse. This is actually a 3-year low, TLT. Let me take a look at this longer term chart. So yeah, this is a 3-year low. Look at this. So Treasury's TLT hasn't been this low since 2019. So the entire breakout basically just completely unraveled. The important here is the mortgage rates, of course. So we can look at mortgage rates, and this is a huge breakout. So notice that we went above this 2018 high, and we broke out actually into a 12-year high. We haven't seen mortgages this high since 2011. So if you're trying to buy a house, you're obviously going to pay more. At the same time, maybe that's a good thing, because finally we'll see some affordability, or at least we will slow down the growth of the rental and housing prices. So maybe this is what the Federal Reserve is trying to actually do, is that they're trying to kind of slow down this rampant acceleration of housing prices. And let's see if this will do anything. Right this instant, I don't see it happening. I still see prices are just unaffordable for housing. But who knows? Maybe finally some sort of affordability will come to the markets. But by extension, Treasury bonds are actually selling, and if you are a subscriber, we sold them short. So if you bought puts, this are actual alerts. Hopefully you held on through this little spike on the 1st of March. That's a nice run for you. That's a 15% gain if you just buy and selling short the actual stock, but usually you can multiply easily by 3 times, so that's 45 to 50% gain. And this is a relatively, not very volatile security compared to stocks. So congratulations on that. All right, moving on to Forex universe. Here's dollar. So I keep saying that maybe this is the top, maybe this is the top, maybe this is the top, and it's just not the top yet. So this is DXY composite. Euro just went to new low, USD. So that's new low right there. But why care about the dollar? And again, there's the original breakout. So if you have my indicators, really easy to trade. See how easy and obvious it is? There's the breakout in July of 2021. You just keep buying here, and then boom, it continued really strongly higher. Because we trade gold, so gold is expressed in dollars. So if we have a strong dollar, gold should come under pressure, but it's not. So you can see the dollar actually is going higher, and so is gold. So I think obviously fear is to blame for this. We are trading gold. We are trading gold miners. We were long GDX, for example, gold miners. So here's the gold miners trade. Actual trade for the subscribers. Right there, alert on the 4th of March. You got another opportunity right there on 15th of March. Nice 52-week high. So yeah, I actually just bought myself GDXJ gold miner juniors, or rather junior gold miners. I think this is a very bullish pattern. So we had a move up, trading sideways, and look how it hit this blue support resistance line very consistently and finally broke out right there on 12th of April, so a few days ago. And I'm thinking we're gonna hopefully we're gonna go continue higher. Many gold miners are actually doing really well. We're trading many gold miners, and again, if you're a subscriber, there you can see there's a whole bunch of there's Agnico Eagle Mines, Alamos Gold, B2 Gold, Equinox Gold, Harmony Gold, and Silver Crest Metals just in this newsletter. That's how many gold miners we're looking at right now. So it's looking like very promising again. So maybe dollar will finally ease a bit, and if that happens, then gold will benefit even more. And here's a nice, beautiful trade for natural gas. Big congratulations to subscribers. So very clear, I'm not thinking about anything at all. I'm only thinking about the lines. Yes, sure, there is the geopolitics. So you could have, argued that said, oh, well, but look at Russia, and they're trying to cut off the gas, or the Europeans are trying to do without gas, so it doesn't make sense for prices to increase. Sure, from fundamental point of view, it does make sense, but you need to kind of think. I really don't want to do that. So here's what all I do is I just look at the lines. Yes, the chart is telling me to buy because there was a close above this blue support resistance line. That's all I need to know. So multiple occasions. Here's one on February 2nd. Support was held right there 10th of February, so another great opportunity if you are more of an aggressive trader. Another opportunity right there 4th of March, 17th of March, and then finally a strong close above 22nd of March, and just a beautiful move higher. And I love when it just goes like that. So Congratulations to subscribers. That's a 45% gain. You know, if you trade in futures, you know it's a huge gain. If you even if you trade options on UNG, so like you bought calls on UNG, you can easily multiply this by 3. That's 150% easily if you bought calls right there. So congratulations to subscribers. Finally, Bitcoin. So Bitcoin, I think, is in a bear market. How do I know it's in a bear market? So this is a commodity basically. So the way I trade it is I don't give benefit of a doubt to bulls or bears. So I only use this red and blue line. So this is a breakdown right there on 5th of January, bear market. So all I need to know is, do I need to, I want to short it. I want to sell it short. And so this is what we actually did. 4 alerts, all successful. Latest one is still going. And here I wanted to show it probably on a weekly chart to show you that a breakdown below, I want to say this yellow line. So I'm going to zoom in on that one. So I'm thinking if we close below 35,500, I think you can completely collapse to like 10,000. I'm not sure it's going to go to 0. I mean, it might still exist in the future, but I think we're going to see a significant move lower. This is a major support around 3,500. I think if you breach that, we can easily continue like a lot lower. I mean, downside target 10,000 easily. So we are selling it short. So latest opportunity right there was in the week of April 4th, precisely. There was an opportunity 31st of March, but we sold it short on the 4th of April right there. So yeah, this is already a profitable trade. That would be already at entry, possibly taking some profits by now. So we're looking at this lows here. If those are breached, then we can see a significant move lower. All right, don't forget to hit the like button. Again, subscribe to this channel and share this video with others. If you're ready to sign up, head over to MasterChartsTrading.com. Click on sign up and sign up for one of the services. So I have trading indicators, which are these lines in the chart, green, blue, red, and yellow lines. So again, these are very helpful to just trade without thinking. So you can see that I don't really need to think about any fundamentals. I just need to know where am I buying or am I selling? So in this case, clearly I'm selling. I don't want to be buying this. Newsletters. So if you want my ideas about what I buy, what I sell, then you can sign up for that. And I think the best deal is to get both trading indicators and the newsletters at $59.95. I think it's a great deal. If you want to talk to me on monthly basis, I offer a 60-minute one-on-one session in addition to the entire trading indicators and newsletter package, and that's at $259 per month. Again, I think it's a very good deal. If you have any questions, please let me know. Again, thank you for watching and have another great trading week. Bye-bye.